The government, by taking disadvantage of pandemic, is pursuing its agenda of privatization in core sector in the name of Mission Atmanirbhar. It is obvious that banking, being in the core sector, is being resorted to privatization. Media is naming the banks marked for privatization, sometime by referring to Niti Aayog, sometimes by referring to Banking Bureau Board, or by quoting official sources from the government. Since 1991, with the advent of new economic policy, this agenda is being pursued initially with the recommendations of Nassimam Committee and later on by referring to various committees appointed by Reserve Bank of India or government. Each one has recommended for dilution of government's share in the capital, but maybe with the stiff resistance from the bank employees and progressive forces and arithmetics of the ruling coalition did not permit it to bring it in reality. This was attempted by the successive governments without any exception. In 1993, Reserve Bank of India came out with licensing policy for opening of new generation private sector banks, in terms of which Global Trust Bank was issued the license. But Mr. Ramesh Gill, who was Chief Executive Officer in Vaishya Bank, in association with the Asian Development Bank, promoted Global Trust Bank. In 2001, this bank came into deep troubles on account of scam in the stock market by Ketan Parikh, just on the lines of Harshad Mehta. In addition to this, bank was engulfed in wrong advances, embezzlement, corruption, money laundering, so on and so forth. And thus, ultimately, Global Trust Bank collapsed. It was government who rescued it by merging it in public sector Oriental Bank of Commerce. Ramesh Gill was awarded Padma Shri by the government of India for his outstanding contribution in banking and also was honored with Udyog Ratna Puraskar. But for government's bailout, depositors of Global Trust Bank would have ruined. The year in which Global Trust Bank was wound up, new license was issued to Yes Bank. On the background of India shining with the introduction of second generation economic reforms, Rana Kapoor and his kin Ashok Kapoor were the promoters of the bank. Rana Kapoor completed his graduation in Delhi and went to United States of America for post-graduation studies, who on completion of his education joined Bank of America, where he learned the lessons of bank and banking, who with his brief career in United States came to India and obtained the license to open most modern and forward-looking bank called Yes Bank. His kin Ashok Kapoor was killed in 26/11 attack in Mumbai, and thereafter Rana Kapoor, despite family feuds, run the affairs of Yes Bank single-handedly. In 2014, advances outstanding of Yes Bank were hardly 55,000 crore, while non-performing assets in terms of percentages were 0.38, which jumped to 2,47,000 crores loan outstanding with an annual growth rate of 35% when entire banking industry was struggling for double digit growth. In the process, rampant loans were sanctioned to Z Group, Anil Ambani Group, Cafe Coffee Day, CG Powers, Jet Airways, Cox and Kings, and similar such corporates, all of which have landed in deep troubles. And it is obvious that with this, Yes Bank also is dragged in deep crisis. During the period, Yes Bank mobilized saving bank deposits by offering 2% more and also mobilized term deposits by using good and bad marketing tactics. On completion of term of Rana Kapoor, Reserve Bank of India did not oblige him by granting extension in August 2018. And it was January 2019, new chief executive officer joined Yes Bank, and one by one, all misdeeds committed by Rana Kapoor came on surface. In third quarter of 2019, Tirupati Temple withdrew its deposits amounting to rupees 1300 crore, and RBI did not permit Yes Bank to finalize its working results for the same quarter, and ultimately this bank was put under moratorium by Reserve Bank of India. There was a rush on the bank and panicky in financial circles. On realization of the gravity of the situation, it was government who intervened in the situation and asked State Bank of India to infuse the capital so as to bail out instead of merger or ownership with its 51% stake. State Bank of India was joined by some of the private sector banks in its operations. Government did not find it worth to merge private sector Yes Bank with public sector State Bank of India, since government had in its mind to privatize public sector banks. On the background, this would have been self-defeating. Global Trust Bank or Yes Bank are not in isolation. Ramesh Gill, Rana Kapoor or Chanda Kochar are not isolated examples. Many more are operating in the system. They are the products of the system which operates with greed and profiteering, which dragged entire world in deep crisis in 2008. Are we not to learn the lessons from the history? Bank employees are raising the voice against those ill-intentioned policies and business model which is detrimental to the interests of the common man, since it jeopardizes the hard-earned savings of the common man. If you are convinced of the cause, please join us in our campaign against bank privatization with a slogan, People's Money for People's Welfare.